Yes, hello. Thanks for joining us. This is Eric with AltaVest, and we're going to take just a few moments here. We're going to look at the Condor, Iron Condor option spread, and compare that to the Dragonfly option spread. Right now, you're viewing my screen here. This is the dashboard for Theta Trader, our proprietary options trading solution. We've developed this for income traders, and we have you in mind. So let's take a look here. We're going to focus on the non-directional strategies. I mentioned the Iron Condor and the Dragonfly, but just to let you know, the algorithms do develop trades every day for bullish, bearish, and non-directional strategies. And we'll go ahead and look at today's Theta trades, is what we call these. The algorithm pre-builds all these trades for us. And there's also dragonflies. If you've never heard of a dragonfly, that's okay. It's something we developed, and we're going to run through a couple simulations. And you can do that here by running through the simulator. I've loaded one here. We're going to compare a Condor to a Dragonfly. And here is a trade from March 4 of this year, an Iron Condor Theta trade. And we're going to use this play button. We're going to move forward in time. And I'll just kind of run you through here what's happening. See as the days tick away here, days till expiration becomes fewer and fewer. The P&L here is changing day by day, and this green here is called the risk thermal indicator. That's our color coding approach to taking managing risk and profit. So the trade is working out fine, but now it's a little bit negative. Turns yellow, elevated risk. It turns orange, even more elevated. Then it turns green again, do nothing. Back to yellow, back to orange. You're getting whipsawed a little bit here. And then it turns red. Too much risk, get out of the trade. So that trade would have ended up losing money if you followed the risk thermal indicator and that signal. But now let's look at the Dragonfly. Now the Dragonfly has a different trade structure. And here is the same date, March 4. So instead of placing a Condor on March 4, what if you would have placed the Dragonfly that Theta Trader generated for the same expiration? And before I run through that, let's look at the structure here of a Dragonfly. We'll go ahead and look at the end of month August trade. And you'll see the view. Here's an overhead view of what that trade looks like. And we're actually, the red line means we're selling these options, calls and puts. And we're always selling a quantity of 4 calls and 4 puts. And then you're buying 3 higher strike price calls and 1 lower strike price call. And then you, of course, on the downside have the same structure where you would buy 1 higher strike put and 3 further out of the money puts. So that structure on the Dragonfly is completely different than the Condor. It has a completely different risk reward framework. And remember, you are long these closer to the money calls and puts. And in this case here, 50 points closer to the money, and that will make a big difference in certain market circumstances. So with that said, you'll see here this Dragonfly, and we'll run through here. And let me pause it. And you can see as the days go by, the trade is starting to turn a little positive, goes a little negative, and that's normal for these types of trades. You have to have theta decay start to work. But look what happens here. We get a blue signal, and that's a profit-taking signal. So the algorithm has determined that it's the appropriate time to take profits and make your money, put your money to work elsewhere. And if you want to play this out, you'll notice there's even 2 other days that show up here that give you opportunity to get out of that position. So I'll point out this was on March 24, and if you look at the Condor on March 24, it was the P&L was green, but it hadn't yet developed a signal to take profits. So you can see that the Dragonfly in certain cases will actually give you opportunities to close out that trade at a much, much earlier time compared to a Condor. You can close that out sometimes at a profit when in fact the Condor doesn't even give you a chance to get out for a profit. And of course, to reiterate, the big difference here is this option here is one you own. So in this case, the market's moving higher. It's getting closer and closer to this one that you own. And the delta on that is higher, of course, than the 4 that you sold. So it's actually gaining in value at a more rapid rate than the out of the money calls that you sold. And meanwhile, of course, theta decay has worked its magic on the ones that you sold. So in any case, that's a brief wrap up comparing a recent Dragonfly to a Condor. If you want further information, just check below in the description. You can also sign up for a demo and get trade alerts from us as well. And thanks for joining us. Bye-bye.